this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now, go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Hey everyone, this is Josh Taylor, and I want to welcome you to another Trade Advisor Pro market update. And I want to go through this video here with you and talk to you about some of the trades that we're currently in and some of the trades that we are looking to get in. Today is February the 2nd, 2012, and it is a Thursday. So if you're watching this video and it's several months ahead, you can use this video as a training opportunity to see why we did what. I want to talk to you about a trade that we're currently in that on the USD CAD pair. Okay, this is dollar Canadian. And we, about 2 weeks ago, we got into a trade here, as you can see, starting all the way back as far as, pretty much the end of October, into October, near the very end, that the USD CAD, other than a small breakout here, is in pretty much trading in a channel. Now, I've talked to you about this on webinars in the past, that 80% of the time, a currency pair will travel in a range. It will bounce in a range, and it's been doing so for the last 3 months. And it's pretty much in this range. So a couple weeks ago, sometime mid-January, right around in this area here, I don't know when it was. I guess it was around this January 20th. We took a buy position at 1.0082, and we were looking to put a stop loss all the way down at 9,800. The chances of us breaking down to this down that far is pretty slim. So this is more of a longer term trade, and we were looking to buy here and sell up here near the top of this range. You can see that this is a lot of resistance up in this point. It's broken up for short periods of time. This is a daily chart, so 1, 2, 3, 4, 5, less than 2 weeks, and then it broke back into the channel. But for the most part, it's been swinging into this channel. Okay, and so we bought here, expecting it to come up here within a week, and we would have closed. In fact, we would have turned around, reversed the trade, and sold. Now, ultimately, we're going to get out of this range, and we're either going to break down completely on a long-term scale, or it's going to take off a little bit more on a long-term scale above these resistance points. But one thing I've noticed here is that we continue seeing lower highs. Boom. In fact, I don't know if I can draw a trend line here, but you can see that the highs are getting lower and lower and lower. So this thing has been trending down slowly but surely. All right. And at the same time, we have a what's called a pennant pattern here. And so right around this time, I was expecting this currency pair to break down through this mark, come back up into this line, but we haven't. So here's where we're going on right now. We are currently in a new channel. And I think in a previous webinar, if you've watched one of our webinars, we talk about support becomes resistance becomes support. So as we were in this channel, and we've been bouncing back and forth, up and down, we were expecting a break up into the top of this channel, and we would have closed at a profit and then resold to take ourselves down here. But what happened is for a short period of time, we've broken below this support line, and now you can see that this has now almost become a resistance point. Okay, so we are going to stay long in this trade. I mean, this could literally take anywhere from, you never know, this thing could take a week, it could take a month before we get out of this trade. So this USD CAD trade is going to be a little bit long term. But in the meantime, there are several other opportunities. In fact, let me look at my notes here. We are actually just sent out a news announcement today that we are going to go long on this pair right around 0.9975. So right around here, which was yesterday's close and today's open, or right around there. If we can get an opportunity for price to drop back down to 0.9975, we are going to buy. We have a stop loss at at 0.9926, which is here, about there, which you can see over here. If it comes all the way down to that point, that's going to be a good place to stop us out. And then the profit target is 1.0050. 1.0050. So right around, I know these charts are a little jammed up with stuff, but right around this thing. So it's because it's been trading in this new little mini range in here. We could wait till it goes all the way to the top of this range, but I like this little range better. It's a little quicker. So right now we're at parity, which means we're at 1.00, which means the US dollar right now, as you can see right here, 1.0000, that's perfect. It's called parity, and that means the US dollar is 100% equivalent to the value of one Canadian dollar. Okay, so we want to make sure that price drops down just a few more pips, down another 25 pips, takes us in, which we could have done earlier. It's already hit that level today, so the Asian market might be able to push that back down, and then we're going to close that right around here. That's going to be a short-term trade. We're going to get in and out of that trade, we should do pretty good. You can see the RSI stochastic is showing that we're slightly underbought. Let's talk about RSI. It's basically an overbought and undersold indicator based on past track record. As you can see here, when the RSI got high, the price dropped. When it got down to the low end mark, it took off. And so it's not a 100% indicator, but it kind of gives us an idea if the market is overbought or oversold to some level, and it's showing that's oversold. It's already working its way back up, so we may not even get taken into this trade. It may. So we'll have to keep an eye on that, and we'll see what happens with that. All right, here's another trade that we're in currently. If you see here, this is the euro yen. I'm sorry, the euro pound, and you can see that since about middle of December, we've been kind of in this range right here. Okay, it's come out a few times, but so we've basically saw a good amount of support here at the 82.82 mark. So we actually got in at 82.82. That was yesterday. So we got in right here, right at the line. It came straight down. We actually put that trade in 2 weeks ago. Right around here, around this day right here, hoping that this trade would come down. It stayed up here for a while, and then it broke back down. We just got into this trade. Okay, so we're in at 82.82. We put a stop loss at the most recent swing low, which was around, what day is this? This is on January 8th, so almost a month ago, 3 weeks ago. That came down to 82.20. So we put a stop slightly below that, 82.04. So here's our reasoning. If this thing breaks down below the recent swing low, it's going to keep driving. So we don't want to put a stop too far beyond that. But at the same time, we don't want to put a stop right here because it's as you see it's channeling. Sometimes it goes past the support and resistance. It just keeps breaking through. As long as it stays within the channel, we're in good shape. We're hoping this thing will keep channeling. And one thing I like about this currency pair, it'll channel. It will channel for a good period of time. So I'm going to show you here. Look at this. You can see these little mini channels. I mean, this is pretty easy stuff, guys. You can see channels here. You can see here. This is on a daily chart. I mean, you can break this down into an hourly chart, and you can start seeing different channels. But we like to trade a little bit longer term. Longer term trades are safer trades, in my opinion. If you noticed on our track record, we don't really have losing months because the way we trade, we're in this for the long haul. And when you day trade, your trades are in and out looking for 25-30 pips, you're going to take a lot more hits. And in my opinion, it's swing trading is by far the safest bet to go. So we're currently in this trade. We are up, actually, man, we're up. Let's see here, almost about 40 pips. Yeah, 35 pips or so. We're expecting price to continue driving this thing up over the next few days. I'm hoping we can get out of this trade in a few days, and then we're probably going to sell short again. I got to look at where the fundamentals on the Eurozone, what's going on over there before I decide if I want to short this thing again. But we're going to take this thing all the way up to the 83.68 mark, which would give us about 85 pips on a nice little 85 pip run. So that's it for that one. Alright, so here's another trade that we're in right now. It was the Canadian dollar yen. So it's a CAD yen. And I'm going to draw a couple lines here. First of all, I'm going to show that since October of 2011, this thing has pretty much been, this isn't a perfect, pretty trend line. Okay, so this thing could drop down a little further. And then let's draw something here, how this thing is shifted a little bit. So we have a couple different trend lines. And you always have trend lines within trend lines. This is why you break down into smaller time frames. I'm not going to have this turn out to be a 5-hour video, but so the charts that I'm showing you right now are based on the daily chart. These are daily candlestick patterns, daily charts. So as you can see, we actually got in this pair at 75, 76. Just draw that in. 75, 76. I can't read there. 75, 76, right there. Okay, so we've actually been waiting right around here after the current pair came down to hit 75, 76 again. We saw this as an opportunity, and we were looking at, as you can see, just some resistance in this point. This pair is really funky. All right, it's kind of hard to read on the chart that I'm showing you right now. When you break it down in a smaller time frame, it's easier to see. But we have a profit target on this at 76.87. So let's put that in. Okay. As you can see, the more solid resistance point is right here. I always like to close a trade before you hit there because it may not quite go up there. I'd rather take my profit and smile for another happy day than wait. And I've done this before. I've tried to put my close out right at the point of these major resistance point, only to have it come in within 1 or 2 pips of my trade, and I lost my profit. It never happened. I had to wait another week for it to come back up. So I would have taken 2 trades had I not done that. So 76.87. Okay, so let's put that in here. 76.87. Okay, there we go. So right around here, we said, you know what? If this thing comes back down to this 75, 76 mark, we're going to get in. And it's exactly what it did yesterday. Now look at this. This is today. This is yesterday. You can see this thing drove all the way down. It drove up pretty high. It closed out yesterday. This thing moved. Let me see here. The low was 75.75. So we got in 1 pip. It went 1 pip below our mark. This thing moved to the high of 76. It moved almost 75 pips. So this trade, you can see that we're starting to move back up again a little bit. So we're hoping to stay on this little mini trend line here and shoots up. And within a week, I'm hoping to close this trade out. Hopefully, maybe this week, but it'll probably be into next week. And we'll close out the trade, and we'll see again. We may short this thing and run it back to the channel down. If we short it, though, I'm going to probably short it a little bit up in this area because I'd rather have it break through this resistance point right here of a few pips to really take us in a good solid way. So anyway, that's the trade that we're in right now. We are currently up, let me see here, 75, 76, about 40 pips right now on that trade. So okay, let's go to look at some other trades that we are going to get in that we just set some new trade setups for today. Alright, so here's another trade that we just got in today on the dollar Swiss, and you can see that right here. I'm going to color this green. Actually, I won't color that green. But we are in a nice little. This is a really nice support line. You can see that when it was resistance, it held pretty strong. When it finally broke through, it's held for several months. It's held pretty strong. So you can see the last few days, this thing's really it's tested this line. And it hasn't been able to break through. Now let's see what this thing is. It's at 91.17. Okay, I just don't have that line labeled there. So what I did is we are going to take a trade right at 91.30. In fact, let's do this. Let's delete this out. Let's move this to 91.30 just so you can see it. It's hard for me to get 30 because I've got to squeeze these things in a little bit more. Alright, we're going to color that green. So we're going to buy, this is going to be a short-term trade, okay? We're going to buy this thing because it's been in this little mini channel here. You can see for the last few days, it's been really holding, bouncing back and forth there. And this is what I like to see in a little channel Man, I'm telling you right now, when we get into a little channel opportunity like this, we will buy and sell like crazy. Boom, 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 boom. The same currency pair will turn around, buy here, buy here, sell here. The same day, as soon as it hits here, we'll have 2 trades in. We'll say close out your target there, and then you turn around, reverse it, and then sell. Next day it goes down. We sell, close out our trade for profit. We buy. It goes back up, back down. So we're going to do that. Now, eventually, it's going to break out. Now, one or two things will happen. We buy down here if we get into the trade. Okay, we're going to get up here. It'll close out, or it'll break down through this, and now the support will become resistance, and we'll get stopped out. If we get stopped out, it is what it is. But the reality is, when we get stuck in these channels, we eventually will get stopped out. But I've had channels, little day trade channels, run like this for weeks, where I sell one day, bought the next day, sell one day, bought the next day, and just run with it, run with it, run with it. Pull out 7, 8 good trades. Eventually get stopped out of one, because it'll eventually price will break through the resistance or break below the support, and then we start in a new channel, and then we just do it all over again. But what we want more than anything, and people say, how do you make money in a sideways market? My gosh, that's the best way, because now you have trading opportunities coming out because we are stuck in a mini channel. Okay, now eventually it's going to break out of this channel. This channel is too small to stay in long term, but it's about a 75 pip channel. It's pretty nice. So we're looking to buy the dollar Swiss at 91.30. And then let me get rid of this little mark here. Actually, yeah, because I can't see what that is. Our profit target is at 91.96. It's actually 9200 is a real solid mark, but I like to go slightly below. So right around here, and we'll close that out to color that green. So you see, if we can buy here, we sell here, we can buy here. Okay. Now I'm going to wait. It might take a few days before this trade hits. It was already at that point today, but we missed that opportunity, so it may take a few days. It may be tomorrow. I'm not sure if it's going to happen on a Friday, but between tomorrow and Monday, we should see price come down to that point, and then take us into a nice little short-term trade. Okay, and then we put a stop loss at 90.47. Okay. About there. That says 46, but it's close enough. I'll show you why. Because even though this line right here that we're at, the entry point, is a solid base, we want to make sure our stop loss is below the latest swing low, a good substantial swing low. Now price came way down here back in November, and it eventually it reversed itself. So it's very highly unlikely that this currency pair is going to break down below this point. But if it does, then we don't want to have it go too much further, because at this point it could be trending in a new way. It could start a completely new channel, and so we want to keep our stop loss as tight as possible. I think at this point, let me calculate how much of a stop loss that is. It's like a 80 pip stop. Okay, but if we're looking our profit target, we're looking for 91.96. Yeah, we're looking for, what's that, 66 pip run, and so this is a very good trade potential here that we're working on here. All right, we're looking at the Euro US dollar chart. This is the daily chart, and right now we can see MACD. This is another overbought, oversold indicator. Is too high. We're slightly overbought. We're looking to short this pair. As you can see, I'm going to back this out. But this thing has been trending down since, what is this around here? Since May of 2011. So around that time, you can see it's getting lower highs, lower highs, lower highs, and then around this time here, this thing really took a dive. Now as you can see here, this thing was really dropping, and then it broke through. So now it looks like this thing could channel for a little while. So that's what we're hoping on. I'm going to zoom this in. Okay, now here's where we're at right now. Long term, I'm looking at some, and I had this broken down at this 2400 mark. huge support line down here. That's going to be a long time before we even come down to the area. But we're looking at, I have a sell opportunity here and a buy opportunity here. You can see here that this thing is, the resistance here is really held very nicely. We could get a rally through that, especially since we're way under the 200 EMA, which is exponential moving average. But I'm looking at two different trades here. We are looking at a sell opportunity at 91.37. So basically, at the market's at. So pretty much at right there, 91.97. So it's pretty much right there. I'm going to sell, and let me look at my data sheet here, and then we have the profit target is 31.07. 31.07 there. I'm going to zoom this in a little bit closer. You can see why. Now, reality is we could actually put the profit target lower, but I like to close out early. Change the color here. And I've got to stop on this one at 32.54. Okay, which is above these mini highs. Okay, and when we break this down, if I broke this down to a 1 hour chart, you'd see it a little bit more detailed. But so what we're going to do is we're looking to sell here. We close out the trade here. Okay, and at the same time, now it depends on who the brokerage firm is that you work with. Some brokerage firms don't allow you to be long and short on the same currency pair at one time. It's called hedging. But some of these companies will allow you to, and they'll usually allow you to enter two different trades. So you can do what's an OCO, it's one cancels the other, or we can just enter them both. So what will happen is we're looking to short this pair here, but at the same time we are looking to go long the euro at 30.22. So if the currency pair comes all the way down to here, yeah, 30.22, right around here. Yeah, right around there. Then we're going to buy again, and then the profit target on that is 31. Okay, I'm trying to look at my data sheet here. I got some. My gosh, guys, we set up 7 new trades today, so I'm trying to dig through this. So we're going to buy here again at 30.22 with a stop at 29.12. Okay, right around here, right below this latest swing low. Okay, which is a solid resistance support level. And actually 2900 is the support level, but we were going to, if it starts breaking down to that point, we don't want to stay in that trade. And then we're going to looking to close out the profit on that trade at 31.96, which is right back up in this area. So short term, we're looking to sell here, close out a trade here. Okay, we're going to close the profit and wait. If price continues to move, we're going to buy again here, and then we're going to work our way up to closing out the trade back up here for almost a pretty nice move, about 200 pip move. Let's go look at one more chart. I'm not going to go over every single trade that we're doing because we have way too many, but let's look at one more. Now we just happen to be looking at my favorite currency pair, the Aussie yen. Okay, now if you're not sure, one thing about this currency pair, let me explain this. We only buy this currency pair. We do not go short. Even when you see opportunities like this, we're just diving. We never short the Aussie yen. Okay, we only look for buying opportunities, and the reason being is because of interest rate differentials. And here's what I mean: the Australian dollar pays overnight at the bank. Overnight interest rates are one of the highest interest rates of any currency out there, and the yen happens to be the lowest. So when you buy the Aussie yen, you had to check with the brokerage firm that you're with. Some brokerage firms do not do this, but if you are long the Aussie yen, even though you're still in the trade and you don't actually make a profit or a loss until you close the trade out, you are getting paid daily interest because you are controlling, you basically buying and Australian dollars and selling yen, and you get the difference between the interest rate spread. Okay, in fact, we'll have a webinar coming up here shortly. I'm working on with my buddy Chris Laurie, who is a master at trading the Aussie yen. Okay, and we're going to talk a lot more in depth on that in the future. And we're actually going to put together some really killer training videos on why the Aussie yen is actually one of the most amazing currency pairs that you can trade. Okay, one of the safest and most solid. But let's talk about where we're at right now. And over the last couple of weeks, I set several trades. As this thing is trending up, it'll eventually correct itself and then it trends back up. But we were looking for some trades here. And let me look at my chart here, and they were to buy at 78.25. So let's put that in. 78.25. Okay. But you can see why, right? This is a solid support line. We wanted to wait for this pair. And this is a couple weeks ago. Right around here, we were looking for this pair. We're hoping it would continue dropping down because it was kind of in a channel. From there all the way through here, you can see. Boy, we missed a boat. I traded a bunch of those, but yeah, I'd like to see that get back into a channel like that again. But we were looking to buy this thing, and it just never came. It just took off like a rocket. So as a currency pair kept going up and up and up, we looked at another good buy opportunity. Right, when a currency pair is trading up, you're looking for an opportunity for a reversal, for the pair to drop back down, for you to get into another buy opportunity. So we're going to get in at 79.11. Oh, I already entered 79.11, didn't I? 78.25. Hold on a second. Let me delete this. I gotta zoom this in further because I can't see. Yep. Oh yeah. This was 70. That's right. 79.11. Which is right around where the bottom end of this, well, actually near the upper end of this channel. Once it broke out of that channel, we were hoping to come down, break through a little bit, take us in, and then take us back up. And it has not done so. But this pair has stalled right around 8,200. We had an upside down hammer, which is a good opportunity, a good showing that we're going to have a reversal right there. And you can see that the pair has come down into this area here. And it came down here, tested twice actually. So we are looking to delete that. But we have three pending positions on this trade. We're going to buy here at 82. What's this number here? At 78.25. Which could be a while before we get down that range. We're going to buy here at 79.11. So what we're looking for, we're looking to accumulate long-term positions. Okay, and usually I'll put on this shorter-term trade I'm going to show you. We're going to keep in and out pretty quick. But these longer terms, man, I'll put a stop loss all the way down here. And I will sometimes I'm in 6 or 7 different Aussie yen positions. And some of them I'm in long-term for like several months at a time. Some of them I'm in and out in a couple of days. So we have that position, and then we are going to, the new trade that we just sent out was to get into the Aussie yen at 80.91, which is right where we at, 80.91, right there. All right, let's color that so you can see it. All right, because you can see here that prices just recently come down. Now this thing could start channeling. We don't know, but this pair, in my opinion, is going to continue going up here for a while, and this is just a pullback. So we're looking to, if this price over the next few days will bring this pair down to the 79.81. Well, I'm sorry, 80. Oh, shoot, where's my chart? 80.91. Then we're looking to go long, and then we'll put a stop at 80.36. Okay, below these little swings that we've had a few times that did not hold. Okay, these little puppies. All right, and then we're looking to take our profit on this one at 8,200, right around here. Okay, so looking for price to come up. We actually may bring that down a little bit more, but right now where it stands, it's pretty solid. And what I'm hoping right now is, because this thing has been driving up for so long, usually price will go up and it'll reverse itself a little bit, and eventually the market kind of stays balanced and it goes into a channel for a pretty good amount of time. Then it'll drive up whether it's trending up or trending down. This happens to be an uptrend. So I'm hoping right now what we're looking at is a long-term channel, at least for a couple of weeks. And if that's the case, then we are going to be looking at some pretty solid positions. Now, in this pair only, on the Aussie yen, normally when we get a range, when we're channeling, we'll sell at the top of the range, buy, sell, buy, sell, buy. We won't do that with this pair, okay? We only buy this pair. And sometimes, eventually, this thing will reverse itself 400 or 500 pips, boom, 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 boom. At that point, we are accumulating positions while it's driving down. For the long term, we put a huge stop loss, sometimes 400 or 500 pips stop loss. And then when that thing starts taking off up, we are accumulating positions all the way back up. We may take on a huge run where this currency pair may drop down for 2 weeks and then shoot back up for 2 weeks. We may take 20 different trades on that trade. And I've rarely, actually, I can't say never. I think in all the years I've been trading Aussie yen, I've only been stopped out twice because of the way we trade this pair. So anyway, that's kind of the market update right now. And if you have any questions, send us a support ticket, and we'll be glad to help you. And have a good one. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.